Welcome, I'm Chris Abraham and you're listening to Legit Cast. Here we explore legal issues pertinent to small and medium-scale businesses. In our inaugural episode, we're discussing company registration. Everything you need to know about company registration. Let's get into the video so you can understand company registration more as I discuss with Donald. Alright, welcome Donald.
Thank you, Chris.
Yeah, so we're going to be talking about the biggest topic in the world, the topic that opens up minds to so many potential business people out there. You know, people want to start their own businesses. They want to know what that process is like. They have questions that they need answers to. So if I want to start my own business, what is the legal structure of a company and how does it impact its registration process? Yeah.
Well, thank you, Chris. If you want to start a business and formalize it, there are different vehicles that you can use to formalize a business. So a business is not just a company. You have sole proprietorships where you register a business name and that's just you as a person running the business. You also have partnerships where you enter into a partnership with your colleagues and you want to invest in maybe a certain idea and make a profit, but you don't want it to be a company. So you can register the partnership. And there you also just register the business name and you also register the partnership agreement or the partnership deed. And that's all it takes. And then sometimes you want something more formal. You want to do a company. The difference between a company and a partnership or a sole proprietorship is that a company is a separate legal person at law. When you register a company, the company becomes separate from you. And if someone is suing the company, they don't sue you, Chris, they sue the company.
Sue the company.
If the company makes losses, those losses are not yours as Chris. Those losses are the company. So the company becomes a person just like you under the law, and you are separated from it. So in order for you to work for the company has to appoint you as a director, as a manager or something, and the company can also fire you, and so on and so forth. So the company
is a different body from the person who starts it up.
Exactly.
Okay.
The company is that's the distinction with a company, that before the 1600s, people used to operate businesses as themselves. In Europe, for example, you had Chris Abraham and Sons, or Chris Abraham, and most businesses had the names of their owners, you know, Berkshire Hathaway, like, you know, or Rockefeller, whatever. This came much later, but before that, the business was not separated from the owner. So when in the Netherlands in the 1600s, they came up with this idea of a corporation. That let's form this thing that is separate from its owners, and other people can have shares in it, but it is different, and its liabilities and assets and profits belong to that company and not to the individual.
I'm sure there's some advantages and disadvantages to this, especially in the route of, like, you know how, you know, there's this saying that the rich pay less taxes than the poor. Does this apply to that? Is this something that, say, the rich, despite the fact that Elon Musk owns Twitter, he's not taxed a lot of money because Twitter is a different body and Elon Musk is a different body? So
exactly. So especially rich people, because they can hire clever accountants and lawyers, know how to play around their different structures. For example, if you have a trust is basically a structure that you set up where this body holds certain assets in trust for a beneficiary. And in many jurisdictions, trusts are not taxed. Or you start a foundation, you know, which is supposed to be a charitable foundation, then you put all your money in that foundation. So the money of the foundation is not taxed, but the foundation can have shares in a company, you know, so the proceeds that the foundation is getting are not taxed, you know. So for example, in New Jersey, Donald Trump has a golf club and hotels, and then he buried his ex-wife there. Under New Jersey law, you cannot tax a place that's used as a cemetery, even if it's used as a business. So there are different legal loopholes that you can use to what's called avoid tax. So avoiding to pay tax is legal, but evading tax is illegal. Those are two different processes. But back to company. So company is a separate legal person at law, which means the requirements to set it up are a little more complicated than a partnership or a sole proprietorship.
Could you be specific, something like the requirements? You just said requirements right there. So to give us some of the examples, the documents that need to be, filled.
Yes, so in order to register a company, there are a set number of documents under the law. One of them is called Memorandum and Articles of Association. So for what's called a private limited company, usually it has between 2 and 100 members. And now there's been a change in the law the last few years where you can have one person owning a company, what's called a single member company. And if the company has more than 100 subscribers, it becomes a public company. It has to list on like the stock exchange, do an initial public offering and that sort of thing. So that's why, for example, you have companies like Uber was a private company. Then in 2019, it IPO'd. So when a company IPOs, it opens up its shares for the general public. Anyone who can afford a share can buy that share and become an owner of a piece of that company. That's what being a public company is. But a private company means only a certain number of people own it, and its books and operations are not open to public scrutiny. If you're a public company, all your books of accounts and operations have to be published for the whole world, to see, which can be a good thing or a bad thing. So memorandum and articles basically shows what are the objectives of the company, what's the company code, what's the share capital of the company, and what's the class of shares. Are they ordinary? Are they preferential? Do they have any special rights attached to them? And how are those shares divided among the different shareholders and the people who own a piece of this company? And how are the company's affairs conducted? How many meetings do you have? And who votes in the meeting? And if I have 10 shares, how many votes do I have based on my shares? And who is the majority shareholder? So the person who owns more shares and more voting rights has a bigger say. If you're making a decision, you're appointing a board, you're firing the CEO, so things like that. So it's basically the constitution of the company. Then you have different forms like Form 20 in Uganda, which is notification of directors and secretary. You have to appoint a board of directors and a secretary. The directors are basically the employees of the company, the officers who do the work. It's like if you set up a school, you have like the headmaster and other people. So the directors are the people who report to the shareholders. So for example, you have a company like Uganda Airlines. It's a company owned by the government of Uganda, the Ministry of Works and the Ministry of Finance, and they have appointed directors. So those directors are the ones who now appoint the CEO and other people, the head of marketing and finance, to run this company. And then the directors have to report to the shareholders. Usually every year you have an annual general meeting and say, you gave us this amount of money, this is how we have used it. And then the shareholders are like, okay, you've done a good job, or you have not, let's fire you and have someone else. And
I'm sure there's an advantage to this form of structure. So what's the advantage of putting out directors and headmasters? What's the advantage of that?
Yes, so back to documents. So you appoint directors and secretaries. You have an address, physical address, and like I said, share allocation and all of that. So the advantage of a company, like I said, is it's a separate legal person at law, separate from its owners. It can carry on its own activities. It can be sued in its own name. It can sue in its own name. The assets of the company are not the assets. That's why the company has something called share capital. It is the money that we, the shareholders, have invested in this company. So if we say the company's share capital is 10 million, that is how much the company owns. You don't own that 10 million anymore. You've given it to the company. So the company has to use that money, and then when it makes a profit, it pays you what's called a dividend. At the end of the year, company announces profit or loss and pays out dividends if it has made.
So that dividend is earned by everyone who is invested in the company?
Yes. The company, based on how many shares you have, the company pays you a dividend, which is a part of the profit the company has made. Yes. And if you are a director or an employee of the company pays you what's called a salary or an allowance. So it doesn't pay you using the share capital. No, the dividend is for shareholders. And which is usually announced at least once a year. And some companies choose not to declare dividends. For example, Amazon famously, since it became public in 1997, used to plow back all its profits into growing the company. And they told the shareholders that we're playing the long game and we're reinvesting this money so we make more money later, as opposed to paying it back to you, and the shareholders understood. So, the company decides whether or not to give you dividends.
They probably didn't make it public.
No. He used to write this in the shareholder letters. Steve Jobs, who was their CEO for the longest. Sorry, Jeff Bezos. Yes. So, that's one of the advantages. Those are some of the advantages of a company, that it's separated, carries on its own activities. And if the company makes a loss, you're able to walk away, you as the shareholder, without incurring any losses. The company can fail, but for you remain rich. So Twitter right now is not very profitable, but it doesn't affect Elon Musk's net worth necessarily, because
it's a separate body.
It's a separate company. Although if the company fails, then the amount of money that you have invested in that company, your shareholding in that company, sort of is affected. So if we calculate your worth based on the net worth of the company and the value of the company drops, then what you own in that company also drops too. Some of the disadvantages are that it's a little harder to set up a company. You need more documents. It's a formal process. It's been simplified over time.
There are a lot of bureaucracy.
There's a lot of bureaucracy, reporting requirements. You have to pay taxes, file tax returns, annual returns. You have to have annual general meetings. You have to appoint directors. You have a lot of paperwork and documents and compliance and licenses. So as opposed to your sole proprietorship, Chris Abraham and Sons, your little shop where you don't have a lot of paperwork, the company has a lot more paperwork, a lot more rules attached to it. And the bigger the company, the more it becomes more complicated.
I'm just scaring people away from starting their own companies.
No.
Because bookkeeping is already a hard thing.
Yes.
Then you add on, this whole company thing, and someone is like, I'm not registering my company, my business as a company.
So not all businesses should be registered as companies. You should think critically about why you should register a company. Why are you registering this company? Can you do it in a different way? So if you really think that you want to benefit from the advantages and can sort of deal with the disadvantages of a company, then go ahead. When you start a company, you should know what you're going into, because the other thing is that when you have shareholders of a company, the shares that I hold in the company are my personal property, which means if we disagree, you can't take my shares away from me unless I sell them. Even if I die, those shares go to my personal representative, who is listed in my will, or my family members. They don't come to you. You see, so sometimes you're stuck with someone on your cap table who you don't like, but they own a piece of the company, and unless they decide to let go, or you go through a complicated legal process to remove them, you just can't. So you have to, a lot of people just say, oh, let me give shares to so and so, and then you have disagreements and
you can't take them back.
Yes, so be very intentional about that. And one thing that a lot of companies now do is having something called a shareholders agreement, vesting schedules to avoid, for example, shareholder conflicts when the company has started, and so on and so forth. So make sure you know it's right. And of course, the advantages are a lot. If you want a loan, banks and other institutions will trust the company, because the company has, legal documentation, and there's a procedure for them to work with the company, to trust it, that you are an individual. If you want investors, if you want certain big contracts, for example, if you want to supply the government, you can't just go and say, hi, I'm Chris. I want to do videography for the government. No. They say, do you have a company? Are you registered with the Public Procurement and Disposal of Assets Authority? Do you have trading license? Do you have books of accounts? Are they audited? Have you filed annual returns? They want all this paper trail that you as an individual, would not possess by the company. So those are some of the reasons why you would.
What's the difference between a company and a business? So I'm sure if you start a business, you also have some documents to identify it as a business. So Chris is a videographer. And he does videography and gets money. That's a business. Anything that you do for a profit is a business. When you take risk to make a profit, that's an enterprise, a business. But not all businesses are formal or registered. So when you formalize their business, that's when it becomes a company or a partnership or a sole proprietorship, when it is recognized. When it's recognized. Under the law, yes. Amazing. So there are businesses that are informal. So when you hear people saying Uganda is an informal economy, because a lot of things are done unofficially, you pay for a lot of services in cash and it's not recorded anywhere. There's no public record of what's going on. So it becomes formal when it's registered and recognized, and anyone can come and trace and see, okay, this is what happened here and there. Yes. Are there industry-specific regulations that need to be considered during the registration process? Yes. So if you want to register a school, in addition to having a company, you will also have to register with the Ministry of Education. If you want an academy, or you need accreditation by, for example, the National Curriculum Development. If it's a tertiary institution at a university, the National Council for Higher Education will have to see what programs are you going to teach, and they will have to accredit them. That's why you're hearing that some courses are expired, because you have to submit your courses, they have to be reviewed and approved before you teach them, and so on. So if you have a fintech, a financial technology company, you have to register, for example, with the Bank of Uganda if you have a payment system, because under the National Payment Systems Act, all payment systems or operators or providers have to register with the Bank of Uganda. So for example, MTN had to split off mobile money as a separate company, and so did Airtel, and have them registered with the Bank of Uganda. If you do money lending, you have to register with the Microfinance Regulation Authority and obtain a money lender license. If you provide services digitally, you have to register with NITA and get a data protection certificate. Sure, there's a long list there. Yes, so depending on what you're doing, there are different regulations. If you're manufacturing, you need to get certification from UNBS for standards. So it's important that someone knows where to go when they want to register their company. Yes, you have to know where to go, and we advise that you speak to a lawyer who can tell you what to do. Would you be knowing the tax implications of registering a company? Yes, so under Ugandan law, what's called business income
And under business income, what is taxed is called profit before income tax. So at the end of the year, the revenue that you've got, all the money that you've earned from selling your goods and services, minus all your allowable expenses, salaries, losses, or other capital investments, when you take everything off, the profit that is made, 30% of that is what's your taxable income. So the rate in Uganda is 30% of business income. That's how much you pay as tax.
So for
If
your
you've
profits,
made
they're
a
taking
profit.
30%.
Yes. If you don't make a profit, you don't pay tax.
You don't pay tax.
And some companies know how to reinvest their money so that they don't have a profit. And you don't pay tax.
Nice. Nice. I think those companies could be like in real estate.
Different, and Amazon
real estate
is a big example also.
Yeah.
They used to plow back all their money and they didn't really
I think
pay
I've
tax.
seen this somewhere in real estate where you get the profits and you take it back and you say it's for maintenance and all of that.
Yes, so there's
So
different.
you just no profits.
There's different ways to, basically account and reduce your tax liability or defer it for some time.
Yeah.
Again, it would be advisable to speak to a tax consultant on that, so that you are not evading tax, but you're avoiding tax.
Yeah. So how long does the company registration take? I'm still on this whole registration thing, but yeah, like how long does it take? And also basing on the length of the registration, how does it affect someone, registering for their company? If it takes long, maybe I'll just be like, you know what, let me just leave.
Yeah, company registration now has been simplified. In the past, say 10 or more years ago, it used to take a while, take months, complicated, you couldn't do it on your own. But now, a lot of it has been digitized, and if you're savvy and you know what you're doing, you could even do it on your own. So it can take about a week or so now to register a company if you have all your requirements. There can be some delays, but that's a reasonable timeline. There are countries where you can register a company in a day, in 4 hours. Even Rwanda, you can get a company in a few hours. In the UK, you just sit on your laptop and within a day you have a company. So depending on where you are, it can be either simple or complicated.
Very nice. Finally, how can a registered company make changes to its information after registration?
Yes, so companies make decisions through what's called meetings. You have board meetings, which are meetings of the directors, and then you have general meetings, which are meetings of the shareholders. And under the law, every company must have at least one annual general meeting, and then if you have other meetings, you call them extraordinary general meetings where you make decisions. So the shareholders meet and make decisions. They vote based on how many shares you have. That's how many votes or how much voting power you have to make decisions to manage this company. And so when you have that meeting, you have a secretary already. So the secretary takes minutes, and the company passes resolutions. Those resolutions are registered. So that becomes an official record of the decisions that the company has made. So you have special resolutions, ordinary resolutions, and board resolutions.
It seems like the company needs to be at harmony before any changes can be made.
Ideally, but also depending on the shareholding structure. If I own the 75%, I can make. It doesn't matter if you disagree with me. Yes, as long as it is recorded. Yeah.
That's our time up.
Okay.
Yeah. So, it was a very good session. Me personally, it has been eye-opening. So, if there's anything the viewers have, to say, you have any questions you have for Donald here, you can put them down in the comments. The next session we shall definitely crack down on those and get more answers for the areas that we haven't yet answered.
Absolutely. Thank you so much. It has been fun.
All right, Donald.
Yeah.